We are having one of the best years for the S&P since the turn of the century. Over the last 24 years, this year's performance that we have going on right now, this very strong kind of just rising trend of the market just continues to play out repeatedly. Every time we come down, retest trend levels, buyers step in and keep buying this market. Earnings are okay, economic growth is fine. There's not really any indication that there is more troublesome impacts ahead coming that are going to certainly change the dynamic of the market from bullish to bearish, at least not yet, because that's what you need to know before the bell this morning. We have this very defined rising wedge in the markets, which is both bullish and bearish, depending on how this thing breaks out and confirms that breakout will determine the direction of the market next. Right now, as of yesterday, we are right at the top of that bullish wedge. And so if markets kind of break out of that wedge to the upside today, so again, if we have a very good report this morning and stocks break out to the upside, then we've got a confirmed breakout here, and then markets should continue to try to push higher. We're also very, very close to re-triggering a buy signal back on the MACD. So again, a breakout to the upside today would certainly provide for higher asset prices over the next week or so. We'll see what happens. Now, right now, futures are pointing a little bit to the weak side. Not surprising. S&P is pointing down about 10 points right now, almost 11 points right now. That's not surprising. Just again, we've had 2 strong days in a row, back-to-back, heading into this Fed meeting. So overnight, not surprising, traders kind of taking a little bit of profit off the table ahead of this inflation report. Again, because if that inflation report comes in hotter than expected, this market's going to sell off because of that reduction of a rate cut. So again, just kind of paying attention to this, the bullish setup is fine here. There's nothing really going on. The 20-day moving average continues to act as immediate support for the markets. Every time we kind of come back, we test the 20-day moving average. That's been a buying point. Investors come into the markets, run stock prices back up, but this compression of price is very close to resolving itself. So depending on the inflation report today and what happens this morning, and again, how that dictates what the Fed will do next, and of course, taking a look at Fed funds futures, if that starts getting contracted rather sharply, that the Fed is going to cut a lot less than expectations, we may start to see this resolve itself back down towards the bottom of this rising wedge. Again, if we break out to the bottom side of that, then we're going to have a bit bigger of a correction. Don't expect that to happen right now. The trend of the market remains clearly bullish. And this is an important matter. We talked a little bit about this yesterday. We are having one of the best years for the S&P since the turn of the century. So again, over the last 24 years, this year's performance that we have going on right now, this very strong kind of just rising trend of the market just continues to play out repeatedly. Every time we come down, retest trend levels, buyers step in and keep buying this market. And again, earnings are okay, economic growth is fine. There's not really any indication that there is more troublesome impacts ahead coming that are going to certainly change the dynamic of the market from bullish to bearish, at least not yet. Again, this week, tomorrow we start earnings with the banks. Next week is going to get deep into earnings. We'll start seeing a lot more. That's going to be the next real driver of the markets after this inflation report today will be corporate earnings and what that says about really the strength of the overall economy and the demand that companies are seeing, because demand from customers is where earnings come from for their bottom line. So again, that's going to tell us a lot about where we are, but markets are fine technically. Valuation-wise, we are starting to approach very, very high levels. Even on a forward PE basis, valuation levels are getting fairly extended now. And again, historically, at some point, that valuation contraction will have to occur as markets start to reprice for reality. So again, just bullish for now, but always manage risk. That's kind of the key takeaway. That's what you need to know before the bell this morning.